Should we? Okay, good morning. I'll make the usual customary statement in the beginning, following which we will have questions and answers and other comments by me and my colleagues. Over the past 3 days, that is during 1st, 3rd and 4th of October, the Monetary Policy Committee discussed and evaluated the recent macroeconomic and financial developments and the outlook. Taking into consideration all available information and analysis, the MPC voted unanimously to reduce the policy repo rate by 25 basis points, with 5 members voting to reduce the policy rate by 25 basis points. The MPC also decided to continue with the accommodative stance as long as it is necessary to revive growth while ensuring that inflation remains within the target. I would like to express my gratitude to the MPC members for the discussions we had and their deep insights and experience, which are reflected in the policy decision and the resolution that has just been released on the website of the Reserve Bank of India. I also want to thank our teams in the RBI for their continued high-quality support to the MPC's deliberations with their hard work, research and logistics. Let me begin by giving a brief overview of the salient aspects of the MPC's deliberations. In its view, the global economy has lost further momentum since August 2019 meeting of the MPC, with trade and geopolitical tensions purveying heightened uncertainty. Among advanced economies, the slowdown in the second quarter of calendar 2019 appears to have extended into the third quarter as well. For emerging market economies, the worsening global economic and trade environment is weighing upon their macroeconomic performance. Crude oil prices were pulled down by softer demand and adequate supplies until mid-September disruptions in refineries in Saudi Arabia, but normalization has occurred faster than expected. Global financial markets have remained unsettled, with bouts of volatility in response to pessimism over global growth prospects. Against this backdrop, central banks across the world are becoming increasingly accommodative in their monetary policy stances, aided by benign inflation conditions. With regard to domestic economy, the slump in real GDP growth to 5% in the first quarter of 1920 has been followed by generally weaker high-frequency indicators for the second quarter. Industrial production was lower in July 2019 on a year-on-year basis, pulled down mainly by manufacturing. The production of capital goods and consumer durables contracted. The output of 8 core industries contracted in August, with production of coal, electricity, crude oil and cement decelerating or going into contraction. The manufacturing PMI for September 2019 was flat, though still in expansion zone. High-frequency indicators suggest that services sector activity weakened in July-August. Indicators of rural and urban demand continued to slow down in July and August. The Reserve Bank's Consumer Confidence Survey also shows weak consumer sentiment, especially relating to non-essential items. On the positive side, there has been a rapid catch-up in the southwest monsoon rainfall after an initial delay in its onset. By September 30th, 2019, the cumulative all India rainfall surpassed the long period average by 10%, while the first advance estimates of major kharif crops for 2019-20 are only 0.8% lower than last year's fourth advance estimates. The prospects for Rabi 2019 season have brightened, with live storage of water in major reservoirs as on September 26, 2019 being 115% of the live storage of the corresponding period of the previous year and 121% of average storage level over the last 10 years. Abundant rains in August and September has also led to improved soil moisture conditions in most parts of the country. Overall, Indian agriculture is well positioned to lead the recovery, which augurs well for rural employment and income and the revival of domestic demand. In the industrial sector, consumer non-durables, intermediate goods have posted sustained expansion during 2019-20 so far and have emerged as potential growth drivers. Moreover, manufacture and construction sector activity look somewhat better in August as per the IIP data. Among services sector indicators, domestic air passenger traffic also accelerated in August. Turning to external sector, with merchandise imports contracting faster than exports, the trade deficit narrowed during July-August 2019. Higher net services receipts and private transfer receipts helped contain the current account deficit to 2% of GDP in Q1 1920 from 2.3% a year ago. On the financing side, net foreign direct investment rose to $17.7 billion in April to July 2019 from $11.4 billion a year ago. Net foreign portfolio investment, excluding the voluntary retention route, was of the order of $3.3 billion during April-September 2019 as against net outflow of $11.5 billion in the same period last year. Net disbursals of external commercial borrowings rose to $8.2 billion during April-August 2019 as against net repayments of $0.2 billion during the same period a year ago. India's foreign exchange reserves were at $434.6 billion on October 1st, 2019, an increase of $21.7 billion over end March 2019. On the inflation front too, there have been positive developments. Consumer price headline inflation has moved in a narrow range of 3.1 to 3.2% between June and August. While food inflation picked up, fuel prices moved into deflation, and inflation excluding food and fuel softened in a broad-based manner in August and offset the firming up of food prices. Inflation expectations of households rose by 20 basis points for the 1 year ahead horizon, but this possibly reflected households' adaptive expectations in response to the rise in food prices in recent months. Manufacturing firms see weaker pricing power in Q3, which renders the outlook for selling prices benign. Overall, liquidity in the system remained in surplus in August and September. Reflecting easy liquidity conditions, the weighted average call rate WACR traded below the policy repo rate in August and September. However, monetary transmission remains work in progress. As against the cumulative policy repo rate reduction of 110 basis points during February to August, the weighted average lending rate WLR on fresh rupee loans of commercial banks declined by 29 basis points. Taking into account these developments and the impact of recent monetary policy rate cuts, the MPC has revised CPI inflation projections slightly upwards to 3.4% in Q2 1920, but retained its projections for H2 1920 at 3.5 to 3.7%. For Q1 2021, inflation is projected at 3.6% with risks evenly balanced. Real GDP growth for 1920 has now been revised downwards from 6.9% in August policy to 6.1%. That is 5.3% in Q2 1920 and the range of 6.6 to 7.2% for H2 1920 with risks evenly balanced. GDP growth for Q1 2021 has also been revised downwards to 7.2%. Noting that the output gap has widened since its last meeting, the MPC was of the view that continuing slowdown warrants intensified efforts to restore growth momentum. recent measures announced by the government are likely to help strengthen private consumption and spur private investment activity. With policy space available on account of inflation expected to remain below the target in the remaining period of 1920 and Q1 2021, the MPC decided to reduce the policy rate by 25 basis points and continue with the accommodative stance as long as it is necessary to revive growth while ensuring that inflation remains within the target. Now I shall address some of the developmental and regulatory policy measures undertaken today for strengthening regulation and supervision, broadening and deepening of financial markets, and improving the payment and settlement systems. On regulation and supervision, microfinance institutions play an important role in delivering credit to those in the bottom of the economic pyramid. Accordingly, the household income limit for borrowers of non-bank finance company microfinance institution, that is NBFC MFIs, has been increased from the current level of 1 lakh for rural areas and 1.6 lakh for urban and semi-urban areas to 1.25 lakh and rupees 2 lakh respectively. Furthermore, lending limit per eligible borrower has also been raised from rupees 1 lakh to 1.25 lakh. These measures are expected to boost MFI lendings to the bottom of the economic pyramid. In the area of financial markets, some of the recommendations of the task force on offshore rupee markets, you are aware that we had constituted this committee under the chairmanship of the former Deputy Governor of RBI, Usha Thorat. Now, some of the recommendations of this task force have now been accepted. Accordingly, domestic banks will be allowed to freely offer foreign exchange prices to all non-residents at all times out of their Indian books, either by domestic sales team or through their overseas branches. Also, rupee derivatives with settlement in foreign currency will be allowed to be traded in International Financial Service Centers, IFSCs. Other recommendations of the committee are under consideration. The scope of non-interest bearing special non-resident rupee, that is SNRR account, has been expanded by permitting persons resident outside India to open such accounts to facilitate rupee denominated external commercial borrowings, trade credit and trade invoicing. Furthermore, restriction on the tenure of SNRR account on all NEFT working days in order to facilitate smooth settlement of National Electronic Funds Transfer, that is NEFT, on 24/7 basis for members of the public from December 2019. This will help in better funds management by the banks. Second, in order to strengthen the grievance redressal mechanism for customer complaints, it has been decided to institutionalize an internal ombudsman scheme at the large non-bank prepaid payment instruments, that is PPI issuers. These are entities who have more than 10 million prepaid instruments outstanding. Third, in order to increase digitization in Tier 3 to Tier 6 centers through wider acceptance infrastructure, and as indicated in the Payment System Vision Document 2021 of RBI, and also recommended by the Committee on Deepening of Digital Payments chaired by Sri Nandan Nilekani, it has been decided to create an Acceptance Development Fund, that is ADF. Fourth, with a view to expanding and deepening digital payments ecosystem, it has been decided that state and UT level bankers committees, that is SLBCs or UTLBCs, shall identify one district per state or UT on pilot basis in consultation with the banks and stakeholders to make it 100% digitally enabled. The identified district may be allocated to a bank with significant footprint in that district. This would enable every individual in the pilot district to make or receive payments digitally in a safe, secure, quick and affordable and convenient manner. Thank you. Just. I think we should just go, follow some order. what I will do is I'll call out one by one. Just please, I'll call out one by one. So as you know, we will, everybody will get a chance to ask questions. So let's follow some order. Yes.
Yes, Governor, thank you. This is Govardhan from the Economic Times. The MPC acknowledges the government's measures to spur demand and private consumption, but it is silent on what its impact would be on the fiscal deficit, and it's going to have almost 1.45 lakh crores dent on the revenue. Did MPC deliberate about this issue, and if it did, and what is the outcome of that? Thank you.
You see, at this point of time, it may be noted that government has made a statement that they will adhere to the fiscal deficit of the current year. So we have therefore no reason to doubt the commitment of the government to maintain the fiscal deficit number as given in the budget. And this I would say because, as you know, government has several sources of revenue. So whatever shortfall is expected because of the announcement of the corporate tax rate cuts, government have the option of increasing, making it up through other sources. But since government have come out with a statement and going by the past track record of the government, we have no reason to doubt the statement of the government, and we go by the statement made by the government that they will maintain the fiscal deficit. Yeah, thank you. Yeah.
Lata Venkatesh from CNBC TV 18. Further to the question on fiscal deficit, will the open market purchase policy of the Reserve Bank be only to ensure adequate liquidity in the bank system, or will it also be to force further transmission because the market may worry, the yields may be pushed up because of fiscal deficit fears?
You see, OMO is basically a liquidity instrument, and in our internal working group report, it has been also stated that now the RBI has several instruments to infuse liquidity. We have the OMOs, which has been there already, so that remains in our in our toolkit. Then we have the currency, the forex swap, which we have introduced last year. Then term repo is something which has been also added this year in the internal working group's recommendations. So therefore, so far as RBI is concerned, OMO will be done to deal with the liquidity situation, either infuse liquidity or to suck out liquidity. And in any case, RBI doesn't manage yields. Yields are market driven.
Okay, so the internal working group recommendations are accepted in that?
No, internal working group recommendations have now been, let me clarify, these are recommendations of the internal working group, and they do not represent the institutional position of the RBI. The internal working group recommendations are now placed in the public domain. We will receive the comments and observations from public and all stakeholders, and they will be taken into consideration. Then we will decide on the final framework. Please.
प्रदीप पंड्या, CNBC आवाज से. सर, पैराग्राफ 22 में आपने जो कहा है कि MPC decided to continue with an accommodative stance as long as it is necessary to revive growth, इससे आप क्या संकेत देना चाहते हैं? ये खास तौर पे इसलिए रेलिवेंट है कि पॉलिसी के पहले जिन काफ़ी लोगों से हमने बात की, उनका कहना था कि 5% के करीब आप पहुंच जाएंगे अब, और 4.75 जो हिस्टोरिकली एक लो है, उसके नीचे जाने की जगह नहीं है. तो क्या इस स्टेटमेंट से आप और MPC ये संकेत दे रहे हैं कि पॉलिसी रेट के लिए ऐसा कोई लोअर बाउंड एज सच नहीं है?
नहीं, पॉलिसी रेट कितना मतलब लोअर बाउंड है, इसके बारे में हम वी हैव नॉट सेड एनीथिंग. व्हाट वी वांट टू से इज दैट वी आर गिविंग सम काइंड ऑफ, ये एक तरह का आप मतलब फॉरवर्ड गाइडेंस इसको मान सकते हैं, दैट द पॉलिसी रेट as long as the growth momentum remains as it is, until the growth is revived, RBI will continue to remain in an accommodative mode. And इसका ये मतलब उससे आप नहीं निकाल सकते हैं कि मिनिमम रेट क्या है, मिनिमम रेपो रेट कहाँ पे जाके RBI will take a pause. It is not possible to comment on that at this particular point of time. All that it says is to give a clear indication that RBI will continue with the accommodative stance as long as it is necessary, and as long as it is necessary to revive the growth momentum.
सर, क्या जो हिस्टोरिकल लो है उसको एक लोअर बाउंड के तौर पे आप देखते हैं, या MPC देखते हैं या नहीं?
नहीं, लोअर बाउंड के बारे में मेरे लिए अभी कुछ कहना पॉसिबल नहीं है. दैट विल अगेन डिपेंड ऑन डिलिबरेशंस ऑफ द MPC. अगले जो MPC का डिलिबरेशन होगा वो डिसीजन लिया जाएगा.
Sir, this is Anup Roy from Business Standard. Government is now asking 30,000 crore interim dividend from the RBI, but we understood from Jalan Committee report that there will be no concept of interim dividend. Can you please clarify?
You see, I have only also, as you said that you saw it in the media, I also saw it in the media. I am not aware of any such demand from the government for payment of interim dividend.
गवर्नर स्वाति खंडेलवाल फ्रॉम जी बिजनेस। मेरा सवाल है, आपने 25 बेसिस पॉइंट जो कट किया, मार्केट की एक्सपेक्टेशन 40 बेसिस पॉइंट थी, क्या वजह रही दैट आपने 40 बेसिस पॉइंट तक नहीं सोचा जाया जाए, क्योंकि अभी भी रिवाइवल ग्रोथ हम नहीं देख पा रहे हैं, तो क्या आपको लगता है 25-40 की तरफ जाना क्यों नहीं हुआ? पहला। दूसरा, ये आपने 110 बेसिस पॉइंट की बात की अभी तक जो है, और मॉनेटरी ट्रांसमिशन आपने बोला वर्क इन प्रोग्रेस है, कब तक आप एक्सपेक्ट करते हैं स्टैगर्ड और जो इनकम्प्लीट है ये अलाइन हो जाएगा? बिकॉज वहाँ अगर होता है तो हम ग्रोथ रिवाइवल की बात कर सकते हैं, क्योंकि अभी भी क्रेडिट ग्रोथ अपटिक नहीं देख पा रहे हैं हम बैंक्स की, तो आप उनको क्या कह रहे हैं?
सी, हमने एक फॉरवर्ड गाइडेंस मैंने जैसे कहा कि वी हैव गिवन ए क्लियर इंडिकेशन दैट द अकोमोडेटिव स्टैंस जो है वो कंटिन्यू करेगा, और we have now cut the policy rate by 110 plus another 25, so 135 basis points. So one has to also see its impact, and it does take time for the impact to filter into the real economy. So therefore we'll have to see the impact of all these policy rate cuts. We'll have to also see how the fiscal measures which government have taken over the last few months in 3 separate installments, and then of course the corporate tax rate cut. So how these impact the real economy, and at this point